Okay, we're live on YouTube now. We're going to start. Are we reducing? What's the problem? Is it network issue? What's happening today? All right, we'll have to start. Whatever is the number, with some other persons will be joining us later. I know they'll be joining us later. So what we are discussing today is still on a candlestick pattern. I will show you something based on what we have learned before. I will show you something based on what we have learned before, based on single candlestick pattern. Based on single candlestick pattern. Look at this. Let me share my screen. I want to start with this. The market is almost closing. It's closing in the next, this 8:28 by my time, 9, 10, 11, in the next 2 hours on fraction. The market is going to close for the week. Currency market is going to close for the week. What do we have for ourselves? I know so many persons, the market hit them this week. I'm sure some persons made huge money. And like when we talk about the fundamental really caused too much problem. On Thursday, Putin, Russia, sent attacked Ukraine. Russia attacked Ukraine. That alone caused panic in the market. Investors started putting their money in safe currency because we don't know if what is happening between Putin and Ukraine, between Russia and Ukraine, will end up into World War III. We don't know. So investors, we are not interested in what happens. Investors are interested in the safety of their funds, whether they want to kill themselves or not, as long as the earth still exists, even if they fight war. Very soon, the market will set, they will come back. Just after a while, they'll start rebuilding their countries. So the investors, what they did, instead of taking their money and put it in their pockets, they had to invest it in a safe haven currencies. And that is why JPY pairs, GBP pairs, CHF pairs, Switzerland pairs, and gold all skyrocketed seriously beyond the imagination of technical analysis. It was beyond technical analysis at that point. But at the point when the market got to what I call the native levels, let me show you what happened in gold. Let me show you what happened in gold. Let me share my screen. I want to start with this before we go to our class. Look at what happened in gold. This is a weekly time frame. Weekly time frame. If you look at this market, look at the weekly high. This is the weekly high. This is the weekly high. Market came to a powerful native level. And this thing that happened is also a yearly high. It is a yearly high, 2021 high. Gold got to that point. When Putin did what he did, market got to that point. Immediately, market struck the high of 2021. The market crashed. And look at how gold is. Gold has just closed. In fact, it has even the market, the momentum was huge. The momentum was huge. By next week, if we look at this market, yes, the market could just do a pullback, but if the market comes back to this zone again, please engage yourself. In fact, this is a selling market as it stands. It's a selling market. What we're just expecting is for the next week to close as a bearish candlestick. Then when we discuss the multiple candlestick pattern, remind me, I'll take you back to this goal. But single candle pattern, we have seen it. I said at the resistance, when you see a shooting star, aggressiveness of sellers. Sellers were at that yearly high, waiting for buyers to take the price there for them to push it. Many persons were waiting for them there. When the price touched that zone, immediately sellers aggressively chased them with machetes, long machetes, and the market sold and sold massively. Sold and sold massively. The market sold and sold massively. The question is, were you in that market? Immediately this market invalidated my other block I pasted here. I did this thing in our weekly analysis. When this candlestick formed, I said the next candlestick we're expecting a buy as long as it did not break above this other block. Immediately the market break away from the other block, I left the market. In fact, it took my stop loss. It took my stop loss, but I didn't bother because it's the money I was willing to lose. It took my stop loss. Now, what happened? We waited for it. My people said, if you're pursuing a bush animal, two things. It's either when you're pursuing, instead of you letting it to go, you cut the tail. But if you cannot cut the tail, you know what you tell yourself? No problem. If the meat has gone today, tomorrow is hunting. So when it happened, they took my stop loss. I said, okay, no problem. Let me watch what's happening in the market. At the point when this market got to the native level, I called my colleague and said, look, we are going to sell gold because gold has gotten to the native level. Immediately I said it, gold started buying also and break above this my level. But I was just waiting for the week. In fact, I went to as low as 5-15 minutes to wait for the movement. Immediately I see that the market has started coming down and that candlestick has closed below this line. I initiated my sell and I sold up to this point and I took my profit out. If I took my profit this evening, exactly 3 o'clock, I took my profit. Whatever it wants to do, I'm waiting for it for next week. Whatever it wants to do is on its own. But it's our profit. Okay. Others are joining now. So let's proceed. So this is a shooting star. Once you have seen, we have done dark cloud cover and piercing line. Please, somebody give me confirmation. We have done dark cloud cover. I showed you this thing as a dark cloud cover in gold that I was selling gold as at that time when I told you. But I gave you a caveat that if it breaks and take my stop loss, I did it in D1. If it breaks and take my stop loss, I will allow the market to go, which I did. And I waited for it at the native level also. Now, if you look at it now, look at that daily time frame. Let me go back to daily time frame. Look at where we saw this is the candle that did a dark cloud cover. I said somebody should give me a confirmation that we've done dark cloud cover. Nobody said anything. But my conscience told me that I've done it. It's better you tell me yes or yes. Huh? Someone was trying to say something. Are you talking to me or you're in church? Hello. Okay. I want to believe you guys can hear me. You can give me a message on the chat box. I will always be checking the chat box. So just give me a message if you feel you want to talk to me, you want me to understand what you're saying, then give me a message on the chat box. Okay, so now this market, I told you my stop loss was somewhere around here. And when I saw this dark cloud cover, I put my stop loss below here, this point, below that point. Now, when the market started selling that day, the next day, I was in that sell. The market gave me profit. I collected that profit. When the market started selling again, I entered. I thought it would go up and start coming down. That whole day was so. The next day, I still put my sell. The next day, the market came, took my stop loss. No problem. It has taken the money it gave me. I waited for it on the next, another time. Let me see what the market will do. Today is Friday. Thursday, the market went as high as this. Now started selling. Look at it. The candlestick for that day closed below the bullish candlestick. Ordinarily, what this thing went to do was to take stop loss. For those ones that have been selling, like my own, it took. And other persons that went up to put their stop loss. It went as high as this to take their stop loss, and the market came down. So the market is scaling down. First, we are looking at it at this level where I have my other line here. I'm looking at the market selling to this point. Then after that, we can continue the sell, or we watch what the candlestick will do. That is why we say candlestick is very, very important. Look at this candlestick. When this thing started happening, when I told you I scaled down, look at it. Let me show you. This candlestick, let me go to 15 minutes. When that candlestick was forming, I was not waiting for it at that time frame. I was not waiting for it at that time frame. Look at where I was waiting for it. Look at it here. When the market did this, look at it. When it came up here, look at where it came up here. I was looking at what the market is doing. Now, at this point, when this bullish candlestick were doing this, if you look at this, if you go to your, we have not done chart pattern, but when you go to chart pattern, this is a continuation pattern. It is called a flag. This is called a flag. It is on that manual. It is on that manual we are saying you should buy. You should buy so that you go and look at what is happening. This thing is a flag, and for the rule of a flag, I'm not teaching you chart pattern now. The rule of a flag is that this market will come here and do almost the same length it has done. Look at it. Almost the same length that this market did. From that low that the market will do almost the same thing. And that is what this market did. When we saw this, when we saw the flag, we were waiting for a breakout, but I did not enter the buy, unfortunately. I did not enter the buy. I was waiting for the sell because my bias was the sell. Now, when this market started buying, I expected this market is going to go here. It's not my market. I wasn't sure, but I said, if this is a flag, it will give me this same movement. Now, at the point when it did this, I now sat down and said, it is time for us to know what is happening in the market. We sat down and started looking at the chart. Brother, this market moved down. I did not enter. The market came back again to do what I call a handshake. This market came here to do a handshake. Immediately this market did a handshake, we're in for the sell. As long as it did not take out this high, it means that the strength of the buyers has come to an end, because this market did a flag at this high and completed the remaining leg. Now this market came back to do a retest, what we call failure swing. This market did a failure swing, because if it is an uptrending market, it would have taken out this high. But the point when it did not take out this high, we engaged this market for the sell, and we had our stop loss on top of this point here, on top Sorry, the network took me out. It was network issue. But thank God we're here. All right, so let me share and continue. Okay, so that is what we did. We saw this and we started moving. Look at these two candlesticks. We saw these two candlesticks. It is what part of what we discussed today. You see these two candlesticks. These two candlesticks is called what is called a tweezer. A tweezer. And at this instance, it is called a tweezer top. A tweezer top signaling a sell. By the time we go to mentorship, in fact, when you understand candlestick, brother, you will have a good trade. By the time we go to mentorship, you see this candlestick, this bullish candlestick here. This candlestick, the next one that was within the range of that candlestick, as in the second one, that was within the range of that candlestick. And this other one that did not take out the high of this candlestick, it has given us a signal. This signal, if you go to mentorship, remind me, I will tell you. This thing, this movement here, this one now that with the range, that's the high, the low, the open and the close, is within the range of the previous candlestick. In fact, it's even worse that it is within the wick of that candlestick. And the next one came out after another day. Okay, after another 15 minutes, it did not take out that high. It has given us a signal that is called, we call it what is called an aggregation. It is called aggregation. I will teach you both aggregation and what we call tatafo, but that is not now. Understand what we're saying. We engage this market when it did a failure swing and the market scaled down, and we continue to milk and suck the milk of the trade. Good. If you were there in what's it called in GBP Euro GBP, I told you that we are in a buy for this market. I said we are in a buy for this market. When I said this market was buying and the market plunged down, I still told you the only thing that will make me take out this my buy is when you take out this week. Now the market came, did what is called a tweezer bottom. Now the market started scaling up. And if you look at where my other block is, that is where I'm expecting Euro GBP to be. Do you know that the issue between the China and the Ukraine is affecting the Eurozone? And Euro as a currency is madly affected. And that is why any currency that is paired with Euro is dealing with Euro. But we will see at the point that Euro GBP will gain the strength. Because of that war, because of that sentiment in the market, that was why the market started plunging down. But at a point, the market started buying. So we're still expecting a buy to this other block. Until then, let's keep. But if you're still in this market and this market is giving you profit, please lock your trade, lock it. Anything can happen. Lock your trade. Anything can happen, please. Okay. All right, so let's move on. Let's go to our class for today. Right, some persons enter the room. Let's welcome them, please, our people. Okay. Okay. We are done with a single candlestick pattern. We're going to what is called, okay, we've even done double candlestick pattern. All right, good to know that. Okay, we've done that cloud cover, we've done the piercing line. So we're going straight to what is called an engulfing candlestick pattern. An engulfing candlestick pattern. What do we mean by engulfing candlestick pattern? Look at what we mean by engulfing candlestick pattern. Please, what we are talking about now is two candlesticks. That means you must see these two candlesticks for you to take your decision for a buy or a sell. That is what it means. That you must see two candlesticks. The two candlesticks must close based on your time frame. Based on your time frame. And I have said in this class that the higher the time frame, the more reliable this strategy or the signal for this candlestick is. You cannot tell me that when you start fighting with somebody, that within 1 minute or within 5 minutes, you know the strength of the participants in the fight. No, you will not use 5 minutes or 1 minute to judge who is stronger. Because by the time they start, the other person might not be balanced. The other one will just take him unaware. Before you know it is on the ground, start hitting him. In your mind, you say, the one that is hitting is stronger. No, it doesn't mean that way. What it means is that if you allow them time, you will know the strength of these persons. That is what it is in the market. If you see a candlestick in a higher time frame, H4, D1, weekly and monthly, it gives you a very strong confirmation, unlike the one you see in a 1 minute time frame, a 5 minutes time frame, 15 minutes time frame, 30 minutes time frame. That is what it means. Or 1 hour time frame. If you see them, we're not saying it will not work, but what you should be thinking of is engaging, doing scalping of that market. And what are you expecting is scalping? 10 pips, 20 pips, you run out of the market. Sometimes even 5 pips, you run out of the market. That is why they say people that are scalpers, good scalpers, are people that have equity. You cannot be scalping with 0.01. You have eye problem. Not be scalped, because for that market to give you $1, the market would have done 10 pips. And that is what somebody that use a high lot size, like one standard lot, is taking home $100. He's taking home $100. You see the person, you just feel like, what's happening? Start feeling bad. It is your account size. So if you have an account size that is small, don't think of scalping. Even if you're scalping, just understand that if you have $1, close that trade. It has blessed you. That market have done 10 pips. Because the market will just do 15 pips and it will change direction. Can you hold it? So that is one thing you must understand. So at this point in time, when you're learning, you should be deciding the kind of trader that you want to be. I don't have a problem with you being a scalper. I advise people, if you want to trade, okay, tell yourself that this week I want to scalp. Let me see how it will be. Scalp this week. Then the next week you tell yourself, I want to be a day trader. Once you have been you are now a day trader. That means when you take analysis different from when you enter your trade, you will see the difference between your body, your eye, and when you were doing it. Then know how it is. Then after that, let me pretend like the institutional traders and do long-term trading. If you do that within a month or 2 months while you are learning, brother, you will sit down and start advising yourself and say, no, scalping is stressful. I don't want to be a scalper. So you should be looking for opportunity in a higher time frame. And that's why I was advising somebody today. I said, you must not trade every day. Don't trade every day. If you see market, if you see opportunities every day, my brother, my sister, you are not getting it right. You're on the wrong track. You cannot see opportunity every day. You can see opportunity every week. That means once you have seen it in that week and you get that market from a bottom, leave it for the week to ride. But because we are just newbie, we want to stay calm as they hot, no problem. But remember that you're not going to stay long in the market. In the market, you're not going to stay long. And don't be tempted to use high lot size if you don't have a good equity. Reject that spirit. It's a bad spirit from Satan. Reject it. Forget all those people, they say they use high lot size to knock and leave them. You and them, you are not on the same lane. You're not, people that have done that, they are no longer trading Forex. They are dead in Forex. They've lost their joy in Forex. Take it as it comes. Know your account size. In fact, we'll discuss all of that in advanced class. That's one thing you will enjoy. When we're talking about risk management, we'll talk about trade management, behavioral management, and money management. That is all that we'll discuss in the advance. Please let us continue. This is a bullish engulfing candlestick. We say bullish engulfing candlestick will have two candlesticks. It will be a bearish market. This is a bearish candlestick that came here. Now, the next one came back. Ordinary people will think this thing is selling because they've seen red. They will enter for a sell. In no distant time, you see the market will retrace, especially if it is on those native levels or on your support and very strong support and resistance. By the time we have gotten to, in fact, by the time you now get the video of that native level, and go through it, you will just tell yourself that support and resistance, you package it and throw it into the dustbin. Because support and resistance is subjective. Where I will draw my support and resistance is not where you draw your support and resistance. But if you understand the native level, where I have my native level is where you have a native level, unless you don't know what is native level. Okay, now, so when it gets to that point, that's when you'll be expecting a candlestick to react. I told whether I don't know if it is this class or the other class. I told them that candlestick does not reverse price. If you read books or listen to some persons or go to YouTube, they tell you candlestick reverse price. No, they don't. You will see that candlestick pattern on that level. That is where you see it. Because when you talk about engulfing, I can show you engulfing in different places, but the market did not change direction. Why? Because it has not gotten to the bus stop. You cannot go to a place where there is the demarcation on the road and you say you want to turn. Turn where now? You cannot turn. You'll just be driving. And you're driving until you get to a bus stop, or a T-junction or a cross junction. That's when you can reverse. That is what happened. When you see this market on this place where they have the demarcation, those things are just telling you that that's your speed. It is, you need to do what? You need to soft pedal. It's a post candlestick for what lays ahead. That is what we're saying. It is when you get to that bus stop that you'll be expecting a reversal candlestick to appear. When you see these things appearing, that's when you take your decision. But if not, please keep that your hand that is scratching you in your pocket. Okay, so now this is the bullish engulfing candlestick. When you see this at the support, it tells you opportunity for you to buy this market. But advice, please, advice. When you see this candlestick, I will not advise you to buy immediately. What I will advise you to do is wait on, remember I told you we are in the theater, dissecting candlestick. Once the next one that will open will not just start buying, it will first come back to have a handshake with this red candle. Once they have a handshake, they will move. Immediately they have a handshake, then they will continue their journey. That is what happened on price. If they don't have a handshake, that market has created an imbalance. I'm not taking some persons too far. They will have a handshake. That is why I will tell you, once you have seen an engulfing candlestick like this, do not buy immediately. Expect the market to come down a little to have a handshake. It is at this point when they are having that handshake and the man is leaving weak behind, you engage your buy. Engage your buy and continue. Because if you buy here, as you buy here immediately, you see the candlestick will go up a little, give you like $1, 30 cents, 15 cents, 20 cents, 35 cents, $1, $90, 90 cents. The next minute, you see to go to -1, -3. Somebody asked me today, Josh, why is it that if the market is going against you, the loss will be increasing fast than the profit? I told him it's psychology. It is a psychology. The thing will go 1, 2. That's when you know that the market is moving very well. 1, 2, 3, 4. If you have a small account, you run away. Oh, is it not this candlestick that is buying now? You call your neighbor. Is it not this candlestick that is buying now? Now, the next one, I just enter for the buy, they started selling. Don't worry. You don't understand that it's coming to have a handshake with this. And when you immediately you leave, the candlestick will start buying. You see, you not tell yourself, by the time you advise yourself, don't worry, these people are watching my chart. If I enter for a buy, they will enter a sell. One man did it one certain time. He called his neighbor and said, come, I will fund the account. If I enter, these people are monitoring my trade. Just watch. If I enter for a buy, they will sell. But what will happen is that if I enter for buy, you enter for sell. Fortunately, man was the neighbor was making profit. He was like, have you seen? But when he came in class, we told him that is not true. You did not know where to buy and where to sell. That is what happened. When they see bullish candle, they enter for a buy. The market come back to have a handshake, they run away. Then the market will continue the buy and leave wick behind and continue the buy. So I will advise you, wait for a retest, wait for a handshake of this candlestick before you continue your buy. Okay, now let's go. This one happened at the support. Let's go to the one that happened at the resistance. I read up all these things. That's why I said it is very detailed. Now, this is the one, this is a bearish engulfing pattern. Bearish engulfing pattern. Look at it. The candlestick, the bullish candlestick, that's an uptrend. It got to a resistance or your area of value. Now, what you saw is that the next candlestick came out and engulfed the previous candlestick. Engulf means to cover it, Everything about the body, the other candlestick, it covered everything. The wick and the body covered everything. That is an engulfing. It shows you the strength of sellers. It happened at the resistance, the strength of sellers. So you should be expecting a sell. But at this point, I will always say, please wait for the market to come back to test this bullish candlestick, to have a handshake, and it continues the journey. Okay, that is for bearish engulfing pattern. We'll move to the next one because when we go to the chart, we'll be seeing all of these things again, so that we continue fast. You can read up the notes later. I don't know how many persons have gotten the notes. But for me to have been stressing this is actually for your own good. It's actually for your own good. I need you to, in UTB Trader Academy, we need you to understand what's been discussed. This is called Harami candlestick pattern. Harami in Japanese is a Japanese language. Harami in Japan means pregnancy. Pregnancy, that is what Harami means, pregnancy. Pregnancy. You know, when a woman is pregnant, the baby is in front of the woman. Is that not correct? The baby is in front of the mother. It is not at the back. If it is at the back, it is hunchback. We don't have hunchback candlestick pattern. What we'll have is pregnancy. The baby is in front and the mother is at the back. And the mother is bigger than the baby. The mother is bigger than the baby. On a very good setup, that's on an ideal chart, you will see that the baby on book Harami, you will see that the mother engulfed the baby. Perfect engulfing. But sorry, yes, the mother not engulfing now. The baby is in front. The baby is in front. It is the baby that determines the direction you are to go. It is the baby that determines the color of the baby, the candlestick that is the baby that determines what you should do next. When you see this thing at the support, when you see a bearish candlestick, which is from a downtrending market, it gets to a support or a native level. What you do is that you're expecting a bullish candlestick to appear. That is why you see some persons, when the market has gotten to what you call your support, my brother, stay clear from that market until it breaks that your support. Don't say, let me go and sell. It's still selling. No. In the rule of support and resistance, we told you, once a broken support once you have a broken support, wait for a retest before you engage your sell. So when the market has broken your support, do not sell immediately. I said that when we're doing candlestick, support and resistance. What you are waiting for is a retest of that zone if you want to sell. But the market can actually break down, leave wick behind, and the next candlestick will be a bullish candlestick. Once you see it start forming and it has completed the formation, it tells you that the market has created what is called a Harami. And if it has created a Harami, your bias is now a buy. Your bias is now a buy. Now, let me tell you, aggressive traders immediately will enter for a buy. Why? We enter for a buy and take the mother, the wick of the previous candlestick as a stop loss. Why some persons will say, let me wait for the next candlestick. If the next candlestick did not take out this low of this baby, I will engage the market for a buy. It is your decision. You know the kind of trader that you are. If you are an aggressive trader, some people are very aggressive, they don't wait. In as much as the pattern has shown, they don't want to wait for any confirmation. They want to enter and put their stop loss somewhere. No problem. If you are a conservative trader, of course, when you have small account, you should be a conservative trader and apply good risk management. You either wait for a confirmation that price will not break below this and engage your buy. Whatever it is, your decision. So this is a bullish Harami candlestick. It should be happening at the support. If you look at it here now, look at it from a bearish movement, it came to a support and the market started buying. The market started buying at the support. As long as the next candlestick did not take out the low of the baby, which is the Harami or pregnancy, mother and baby. Now, the next one is what is called the bullish, the bearish Harami. Bearish Harami. That's what we want to discuss. Bearish Harami. This is a bearish Harami candlestick. Bearish Harami is that at the resistance, when you see this happen, at the resistance, when you see this Harami, that's you'll see a bullish candlestick, and the next one is a bearish candlestick. If it gaps down, better for you. If it does not gap down, but it covers the previous candlestick, covers the wick, if it covers the whole wick, the range. When I say range, I mean the open, close, high and low, the range. If the previous candlestick covers it, beautiful. But sometimes you might just see wick above, but we're talking about the body. That is our area of interest. Once it covers those things, it tells you it is Harami. Please, Haramic that market. Ensure you Haraminize that market heavily. Ensure you enter that market for a sell, especially if it's happening at your kill zone. So this is bearish Harami candlestick. I said we'll take all of the candlestick of the two candlestick pattern. We'll take all of them. Then we'll go to the chart and we'll be citing them. You'll be seeing them as the player. When you see them as the players, then it will be boosting your confidence in this market. It's only when your confidence is boosted that you can do analysis and say, I want to enter the trade for a buy. Okay, now we're moving to the next one. I said the next one is Tweezer. Tweezer candlestick pattern. What is Tweezer candlestick pattern? Tweezer is a Japanese language that means twins. Twins. It means twins, identical, twins. I said it on the chat. Hello?
Yeah, Andy. It's yeah, good evening. How are you?
A Christian is telling somebody how are you in our class. Types of, we talk about Tweezer candlestick pattern. Now, on the Tweezer candlestick pattern, we have what they call the Tweezer top and the Tweezer bottom. Tweezer top and Tweezer bottom. Now, look at what we mean by Tweezer top. Tweezer top should be happening at the resistance. Tweezer top should be happening at the resistance. That is when we say top. If it's happening at the bottom, which is support, then we should be talking about Tweezer bottom. Now, what do we mean by Tweezer? It's either the wick will be on the same level. On the same level, no one will be higher than the other one. It's either the wick will be on the same level or the body will be on the same level. Then you know it is Tweezer top. The wick, look at this one at the circle. The wick will be on the same level or the body will be on the same level. But in an instance when you have the wick and the body, the two wick at the same level and the two body on the same level, please engage that market for a sell. It has given you a confluence. it has given you a double confirmation. When you see the wick and the body on the same level, it has given you a double confirmation. Now look at this. When we're talking about the wick and the body being on the same level, we're not talking about the low. The low can be anyhow. The low can be anyhow. But what we're talking about, when we come to the tweezer.com, that's what we'll be talking about low. That the low, the wick, and the body will be the same level. But when we talk about tweezer top, we're saying the top, the up, not the body. Don't bother about the body. If like one body belongs to Jerusalem and the other one to Ukraine, is not our concern. What we are concerned is it at resistance, are they the same wick, same level, and the body the same level? That is what we are talking about. If you look at what happened, based on the candlestick anatomy we have discussed, when we started, I told you, candlestick have the open, high, low, and close. Now, look at this. It means that this bullish candlestick came here, went to this high, came back here, closed here. Now, the next candlestick, we didn't know if it's bearish or bullish, we don't know. It came here. Remember, it was sellers that pushed the price down to this place. The next candlestick came, opened here. We don't know what will be its form. Is it a bullish candlestick or a bearish candlestick? Me, Joshua, when it's forming, I don't know. But when it's formed, we'll see. That's why we say wait for that particular time frame where you're using as analysis to finish. Now, this candlestick came up. When it was going up, it was a bullish candlestick. People think it will come and break this, but sellers now pushed it down again. When sellers did this, they pushed it down here. Ordinarily, if it is at your area of level, at your native levels, why I'm shouting this native level, because it is very important and it is a very, it gives you a high signal. That level, the high, created serious imbalance. Now, when it gets to that point, sellers pushed it down. If this thing is happening within 1 hour, they have just pushed this price down this place. If you had allowed sellers another 10 minutes or 20 minutes, this candlestick would have gone down. Now they said, okay, no problem. We're waiting for you people. They came again. Buyers pushed it up again. Sellers came, pushed it down. Now pushed it down, 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 and it closed below the close of the previous candlestick, telling you sellers' strength. That is how we interpret chart. That is how we interpret candlestick. That's how we interpret our chart using candlestick pattern. Now, at this point, it has told you now that sellers are now in this market aggressively. Now, what are you waiting for? Engage the market for what? A sell. Engage the market for a sell. Engage the market for a sell. Look at what happened here. This market came down here. Now you see the market came back to give buyers, sellers opportunity to enter the market for a sell. With this bullish candlestick, it came as a retest. Now the market started selling and started selling and started selling. Why? It saw a tweezer top there. Thank you. We're moving straight. We go to tweezer bottom, the same thing we have said. Now we are not interested in the high. The wick can be any length. The body can be any length. Now look at what we're talking about. The close, the body below should be the same level. Should be the same level. Ideally, should be the same level. And look at it here. A bearish candlestick, a bullish candlestick came out and went up. Now you're expecting a buy of this market. The worst thing that can happen to this market is that once you have bought, market makers could just do what they know, come back to this point, take out this low, but leave wick behind. And the candlestick close as a bullish candlestick is an opportunity. They have just given you where you need to put your stop loss. I've always been stressing this. That is why we teach you this is so that you create a signal for yourself. I was advising somebody today, oh God, I was advising somebody today when a guy in my mentorship class, I was advising him, I told him, say, look, once you have in risk management, you must decide before you enter the trade, based on my account side, how much am I willing to lose? That is the first, not how much am I willing to get. No, how much am I willing to lose? That's the first thing that will happen to you. All those church people that will say it is not my portion loss, forget that, you know, it is not real. It is not in this market. you will lose. But what we're saying is that let your loss be tolerable. Let your loss be tolerable. So sit down and ask yourself, based on this market, how much am I willing to lose? You do when you go to an advanced class, we'll tell you how to calculate based on your lot size. So based on your capital, your equity, and your lot size. Because that thing you are willing to lose is what will determine the lot size you will use. So many persons just enter the market, habitually just enter with one lot size, enter with 0.5, enter with 0.05, just be playing with the market, this whole market. But because it's a demo account. But when you start putting those checks and balances in your demo account, I tell you, when you go to a live account, you start doing well. So now you begin to ask yourself, how much am I willing to lose? Okay, I'm willing to lose $2. Okay, now that means that $2 is what you're using as a stop loss. Now, if I'm losing $2, from here I want to enter this market now to this week, is it $2? Oh, I have just checked it. It is, this thing will give me $4 or $5. I will not. Because if I use $5, I'm exposed more than what I'm supposed to do. No, let me leave this market because it has gone. Or the market will come down again. Give me where I'll put my stop loss to be like $2, then I will engage the market. Disciplined traders, that is how they behave. That is what they do. That is what they do. If you do all of these things, my brother, you don't need signal. Those people that gives you signal based on scalping. The question is, by the time I see me that wants to give you signal, by the time I want to give you signal, I will check first now. I would have entered the trade. I will now start typing buy at, sell at, stop loss, take profit. Bros, before I'm doing this thing, I want to scalp $10, $20 pips. The market have gone like 10, 5 or 10 pips. I've typed the whole thing. I'll check, is it correct? Are you sure the stop loss is correct? Okay, I'll send. Bah! The next thing, if I send, before you go and check your chart, some persons are not even online. By the time you see it after like 5 or 10 minutes, you see it. You see, hey, Oga Josh have sent his signal. Oga Josh is Forex God. Since he has sent his signal, let me go and take. The next thing you go to your life account and like, bah, you've forgotten that Oga Josh have sent this signal like 5 minutes ago. And within that 5 minutes, I've taken like 3 minutes, 4 minutes to do that, to check the stop loss, the take profit, and even enter my own trade. Now you enter your own trade. Next thing, as you enter, market have gotten to 20 pips. Now the market has started coming back and say, Oga George does not know what he's doing. How? Meanwhile, he has collected money from that market. But you entered late. If you enter late in the market, you will buy our. You will not buy the good thing. So that is why in UTB trading, we are spending our time to teach you to generate that signal yourself. That is why I have told you, once you have seen this buy, if you didn't get it, leave it, don't rush it. The market will come back. Possibly to come back to take out this low. By the time it takes out this low, leave that week. It has given you opportunity for you to enter the market that week as a stop loss and engage the market for a buy. Oh, somebody said, I will soon be a pastor. A Forex pastor. Okay, so this is Twizzler. But then we'll come again, we'll talk about the sandwich. That will be after we've gotten to let's go to our chart and see these things as they play out. Okay, this is our chart now. All right, so let's start looking for, the first is what? Harami. Yes, is it Harami? The first is, let me go back to my Bible again. Yes, in line. Okay, the first is engulfing candlestick. Let's go and look for engulfing candlestick. After shown you a Harami, let me check for engulfing candlestick. Engulfing. Okay, let's go to this place first now. Engulfing candlestick. Let me see perfect engulfing candlestick. Good. Let's see. Okay, look at this. Look at this. Look at this. This is an engulfing candlestick. Look at it. Look at it. Pressure. Engulfing candlestick. This is engulfing. These two candlesticks. Look at this one. This bullish candlestick engulfed the previous one. Engulfed the previous one. And as it engulfed the previous one, the market started selling. When you look at this, if you look at this market, by the time you have learned chart pattern, which is still on this book, on this your slide, if you see this like this market have given you something like this, based on this. Look, okay, now even if you say based on this, look at it, this market has given you this. Now at this point, this is called a pennant. This is called a pennant. Now at this point, when you see something like this, now we're looking at a breakout up. That's why I told you that if you understand price language, you see all this chart pattern, you see all this or this thing, all these indicators, they will obey chart pattern, price action or price language will help you to enter the market early enough before, in fact, you start using other things as confirmation. But price action will make you enter the trade early enough, then every other thing is jara. So if you've seen this, you would have known that, okay, that we're looking for, this is a pennant, and that we're looking for a buy. This market break above, came back to the test, and the market started buying. But this is, and we're not talking about chart pattern now. You can go to the book and read it beforehand before it gets to the class, so that you have a better understanding. This is an engulfing candlestick. It's an engulfing candlestick. Let's see this for a buy. Let's see an engulfing candlestick for a sell. Let's see it at a resistance. Look at it here. Look at an engulfing candlestick. Look at engulfing candlestick. This one is an engulfing candlestick. Engulfed the previous candlestick and the market started selling. It came back here for a retest. It came back here for a retest and the market sold massively. So this is an engulfing candlestick. I told you can see this candlestick anywhere on the chart, but where you see it and it will give you a better interpretation. A good trade is when you see it at those native levels, or what you call support and resistance. Now let's see another engulfing. Then we'll say goodbye to engulfing. Let's see. Okay, now look at engulfing. I'll use this one now to show you different things. This is engulfing. This is engulfing. This is engulfing. The market engulfed the previous one. It engulfed the previous one, and the market moved. We move. Did a retest here, and we move. We move. When you see this kind of thing happen, that's when you appreciate that statement, we move. Okay, now I want to show you. After engulfing, we talked about Harami. Look at Harami here. Look at a Harami. Look at Harami here. Look at Harami. This is Harami. Harami. This is Harami. This two candlestick is Harami. Baby and mother. Baby and mother. The baby is within the range of the mother. The range of the baby is inside the mother. So this is a good Harami. Harami for a buy, a bullish Harami. A bullish Harami. Now it came to this up here. Look at where I do my distance. The resistant line. If you look at this, if you understand chart pattern, this thing is called double bottom. Double bottom. To do what? To complete this leg for M. And this is called the neckline. Now, this market came to the neckline and created what? A Harami. A Harami for a sell. Now it did not take out this move, which is created a double bottom, and the market scaled up. At this point, when it wants to create a double bottom for the movement up, it created what is called an engulfing candlestick. That's why I said, if you understand candlestick, you just be wrapping the price. You just, when the price cannot move without telling you something, the price will speak to you. If you understand that price language, just like somebody that is from Imo's Equere, if another person that is from Equere speak, you understand. But if you're not from Equere and the person speaks, you will not understand what the person is saying. You will be doing a different thing. But when the market, price language, when it speaks to you using candlestick, you understand it and you will join the trend fast enough. Look at, okay, this is Harami. At this point again, the market came and created a Harami for a buy to complete that leg. A Harami for a buy. Now, even in this, about this current price, look at it here. Look at this market. This market, look at the Harami here. Immediately, I gave this market for a sell. If somebody that is in a weekly analysis, the person will bear me witness that I gave this market for a sell. I have done this thing last 2 weeks here. Last 2 weeks. In fact, this is a weekly time frame. This is the third week that the market has started giving me what I want. Look, I do this thing. I told them in the weekly time frame that if this market did not break this high, even if it goes up and leave weak behind, please, we are in for a sell. Unless it close body above this my line, I gave them the price for this line. I said, if it closes above this, then stay clear from that market. We're in for the buy. But for now, we are in for a sell. I told them, even last week, I still told them I have a bias for GBP, JPY for a sell. Why do I say so? Look at a Harami here. This is a Harami. Price came and started doing what it knows best, as if it wants to take out the Harami, but it did not at the end of the week. Look at the market scale down. Scale down. This other week came back again. Crazy said did not take out the high of this. Now look at what is happening here. And I told them that this market, we're scaling down to this point. Look at where I draw this, my other block. We're scaling down to this. When it will get to this point, I don't know. But what I know is that it must get to this point. As long as the market has started moving now, we are in for a sell. We are in for a sell. This market for a sell and up to this point. If you have a live account, you would have been taking these signals I am giving you. We are talking about, I'm teaching you now, I'm giving you signal. I don't know when you want me to give you a signal again. Is it when I'm busy? I might just enter this, my trade, and leave it. I may not be looking at this trade. I might be doing other things during the day. Before you know it, the market has moved and you start telling me, God just did not give us a signal. But I've given you, what was your job? Sit down and watch the chart and see what I have said. Is it working? Is it playing out? If it's playing out, okay. Enter that to market with a small lot size, 0.01. And look at it. Look at this place that this market did this higher. It has given us opportunity to put our week for a sell. Anything that this market is doing, as long as you put your stop loss here, as this market have gone this place, take your stop loss and lock it. This market, it will go to hell. Anyway, whatever it wants to do is on its own. You have closed it, you have closed it. God knows that the one that you have locked is in the bank. Even if your laptop enter inside water, you cannot trade. That one you have locked is in your account. Even Satan knows that nothing will happen to it. So we're saying this market is scaling down up to this point. We're looking at the JPY is gaining strength based on this, and it's a safe currency, safe haven currency. When I said this thing, I didn't know that Japan will cause problem. Russia will cause problem between Russia and Ukraine. But whatever it is, the market will always give us what it has prepared. Oh, shit. Okay, I think the next one is a tweezer. Let's look for a tweezer. I showed you a tweezer earlier, but let me show you a tweezer here now. Let's look for a tweezer. Tweezer up here. Let's look for a tweezer. I don't like going far from the current price. That's one thing I know. I like teaching with current price. I like teaching with current price. Tweezer, show me now. Okay, let's leave this chart and look for another chart. Okay, look at this one now. This tweezer, I told you that it's either the body or the wick. If the body gives us, okay. If the body and wick gives us, it gives a double confirmation. Now look at it. Look at this one here. Look at the wick. Let me just put. Look at the wick. Have you seen that the wick? Sorry, the body. The body of the bullish candlestick and the bearish candlestick are the same body. They are the same level. But this one does not have a wick, but this one has a wick. So now this one did not give us the both wick as a confirmation, a wonderful confirmation for a buy. Sorry, for a sell, because it's happening at the resistance. It's not giving us a better body but the sell. So why? Because this is an engulfing and it is tweezer. Engulfing and tweezer. That is what happened here, and the market scaled down. Permit me to see one that has the perfect thing we're talking about, the wick and the Gineko. Let me see. That wick is not very common most times. Why I don't like removing this thing is because I used it to do my analysis. That's why most of these things I don't like removing them. Because if I do my analysis, I don't go back to that chart again. I just wait for price to come there. Any day it comes there, I just look at my chart and I engage my market. This almost gave us the tweezer bottom, both the wick and the body. Look at the body, the same. Look at the wick, the same, and we scaled up. And this thing is happening at a support. Look at the range within the support. So at this range, we're expecting a breakout either up or down. The market breaks up, then we are engaging. If you look at this and this thing is happening like this, you'd have engaged your buy here, and take this week as a stop loss. Where I have drawn my support line, which is my native level. That's why I told you about native. If I've drawn my native level, once a week comes below, if it breaks, I would think the market wants to break that level. I'll look for another native level. But if it does not break it, if you leave weeks behind, it tells, based on my trading strategy, based on my conviction for what I have known, trading native level, I know that that market has given me a week to put my stop loss. So as I put my stop loss, whatever is happening, unless you come and take my stop loss, is the money I'm willing to lose. I was okay, no problem. Let me wait for the next market. You can give me back my money. So one thing we'll tell you about UTB Trading Academy is that, we're not saying you will not lose money, but your gain will always outweigh your loss. That is one assurance. You have our seal. If based on what we're teaching you, you have our seal. But if you go and apply a different thing, or is your own. Now look at this. This is a perfect tweezer. Perfect tweezer. Look at it, both the body and the wick. I had to put this thing so that you see. Both the body and the wick are on the same level. So that is a tweezer top. A tweezer top we're looking for a sell. Okay, so let's go straight to the next one so that we'll give opportunity for people to ask questions. Let's go straight to the next one. We actually don't have much time. That's why I say get this material so that I can be reading it, because I don't go about reading all those theory. We'll go straight to the point. Okay, I can assure you this is something you cannot get based on, you cannot get it anywhere. It's based on personal experience that we have bringing this thing to the fore. Sandwich candlestick pattern, this sandwich candlestick pattern. We'll talk about sandwich candlestick pattern. What are we talking about? Sandwich candlestick pattern is simply what we call, sandwich, at least the ladies in the house will understand what we mean by sandwich. We say sandwich is bread and butter. For those ones that go to eatery, they have the bread. They have bread here. Bread on one side, bread on one side. Then you have the likes of macaroni, you have the likes of indomie, the likes of green pepper, white pepper, red pepper, everything put together. Even the diet, everything mixed together. Then you carry mayonnaise, pour inside, pour the mayonnaise inside, and bring another ketchup, pour ketchup inside, and carry the other bread and cover it. And that is called what? A sandwich. But on our chart, it's just that by that analysis, that knowledge, that's what we're using. Sandwich is that the one at the extreme, the both extreme, should be the same color or be the same candlestick. And the one in the middle will be a different candlestick. That one in the middle, that thing you put in the middle of the two bread is what tells you that it is sandwich. In this instance, it is the candlestick in the middle that tells you what you are looking at. The one in the middle is what tells you the direction. If it's happening at the support, the one in the middle is what is telling you the direction, is what is telling you the direction. So it is what is telling you the direction. So if you look at this, it's telling you that it's a bull market. So it's a bullish sandwich candlestick pattern. Look at it here. We'll go to the chart. You see it at the bearish movement. You see this bullish candlestick appear. Then a bearish candlestick again appear. Like when I told you that at this point, if you look at it in a smaller time frame, you see that people have started buying this market. Now this one came back to do what is called a stop run on this level before it will continue the movement. So that's the bearish candlestick. And after that point, you see a bull market up. So this is called a sandwich. Once you see it, you engage yourself, your buy based on what you are seeing at is support. If you see the higher time frame, like we've always said, it gives you a strong confirmation. I've always told you, like what is happening in gold now. In gold, I'll be looking for opportunity to sell gold by next week. Opportunity to sell gold. I'm not saying gold will not buy, but if it buys, I'll be looking at it. Where is it buying to? Then at that point, I'll wait for it and initiate myself. And when the market starts selling, because it's my bias, I'll increase my lot size because I'm convinced of that direction. But even if I want to buy, I'll have good risk management. Even if I'm increasing my lot size, it's still based on good risk management. But if I'm using 0.01, it means I'll use 0.02 because the market is playing to the gallery. Okay, so we're moving on. This is a bullish sandwich candlestick. We're going to the next one, the bearish candlestick. You read it, it occurs in an uptrend. The first candlestick, the second candlestick, what are you expecting in the second candlestick? You can read all of that up. The sandwich bearish candlestick pattern. Look at the sandwich bearish pattern. This one is at the resistance. It tells you the market is selling. You're looking for opportunity to sell this market. This one just went to take a stop run, to take out the stop loss before it continue to move. And I told you when I will teach you stop run, I'll tell you that until this market have done this broad daylight robbery, like it happened in gold, then you can initiate your sell, because these guys are going to take your stop loss. Wait until you see this, because you cannot see those baby candlestick without a stop run. No, it's not possible. The institutional traders will always do a stop run before they move. That is when you see the move with momentum. You see those there. That's why if you ask so many traders, like 90% of traders, are you in this move? They'll tell you no. Like, did you catch it from the up? They'll tell you no. Why? Because they do not know this thing. They do not know to what extent the market makers will do their raid. Don't know the extent to which they will do their raid. And by the time they do finish their raid, they use speed and move. The person that is doing this raid could just be a very small boy. Just be telling them, push the price up. How much do we have? Push it, push it. By the time they're satisfied, they move the market to the direction. But when you understand those native levels in a higher time frame, my brother, you fear no evil. You just wait for them, sit down there and wait and see what they'll do. By the time they get to that point, you scale down and start looking for reaction. Start looking for a confirmation. The first confirmation is that, yes, they have arrived at the native level. The next thing is, what do? We go back to a smaller time frame and start seeing the direction. By the time they have done whatever they want to do and they want to move, we quietly join them. It's not our fault. Okay, now for that we don't have money, but we'll pretend like we are following them. All right, this sandwich bearish candlestick pattern, it appears at the resistance. Okay, after that, we have the morning star candlestick pattern. What is morning star? This is a morning star. Morning star candlestick pattern happens at the support. When we say morning, you greet somebody morning when you're waking up from your bed, and your bed is not as high as you. So you are rising from your bed. That's when you say, good morning, sir, good morning, ma. And when you're going back, you're saying, good evening. You're retiring to your home. Like you went out, you went to visit friends, you went to do your business, you went to work, you're coming back. It is called evening, good evening. So at the resistance, we're looking at, it's called an evening star. Then in the support, it is called a morning star. And what do we mean by morning star? It will be a bearish market. The first bearish candlestick will come up. The next one could be a hammer. Take note. Could be a hammer. By the time you read this, you will see the rules. You will see the rules very well. It could be a hammer. It could be a hammer. It could be an inverted hammer. It could be a normal hammer. Anyone. It could be bearish candlestick. It could be bullish candlestick. It's not your problem. The candlestick is not your problem. But if it is a bullish candlestick, a bullish hammer, or a bullish inverted hammer, it gives you a strong confirmation. But even if it's a bearish candlestick, no problem. But what we want to see is that I want to see something like a hammer at the support, or inverted hammer at the support. Now, when you see this, now what do? The next one, you're looking for a complete confirmation, complete movement of this. If you are an aggressive trader, you see this based on where it is happening at your native levels of support and resistance, or your area of value. Now, when you see this, aggressive traders will say, no, I need to enter the market for a buy, let me have it early. Why some persons will say, let me wait for the confirmation. So that means for 3 days, you wait and see this thing. It are waiting because this candlestick has eaten into your profit. Now you wait for the next day, a candlestick to come down a little. Let it come down a little, at least 50% of this one. Or come back to have a handshake with this man, this hammer. If it does have a handshake, that point where you think the market is selling again, it is coming to have a handshake with this man. At that point, when it has a handshake with this man, initiate your buy. At that point, initiate your buy. You start seeing wick will start going or leaving wick behind. Now close as a hammer. At that point, you can even lock your profit. Now allow the market to do whatever it wants to do. So wait, because when we do, by the time we do feedback, we'll always tell you that for every swing, that there will be a discount. There will be, because if you come to this high to come and buy, the market will come down. And as the market is coming down, you want to risk $2, $3, $4, $5. The market is giving you $6, $7. High BP comes. You become aggressive. You become angry. At that point, you say, okay, let me close the market. You close the market. Immediately you close the market, say, let me go and ease myself and come back. You see that market that you have closed is changing to a hammer. You say, oh God, what is this? You sure I can trade this market at all? Before you know it, you start losing interest. But if you don't know, you get why. That is why we're here, to get you covered. Okay, so now this is a morning star. You're looking at a buy for morning star. Now the next one we're going to is called the evening star. This is the evening star. Now look at the evening star. Okay, now this is the evening star. Look at it here. This is the evening star. At this evening star, you see, even when we talk about a single candlestick pattern, you see it played out. It could be a shooting star at the resistance. It could be a hanging man at the resistance. Only that one alone we say is a confirmation for a sell. If you see a hanging man, you just need another confirmation. If you see a shooting star, aggressiveness of sellers, enter for a sell. Now this one now, let's say this one happened, you did not see your chart. You see this one happen, or you see this one started happening. You need to wait. Let's see this day if it will complete this evening star. If it completes this evening star, you scale down and you are in for a sell. You are in for a sell. You are in for a sell. This one happened, came back again to do a retest, to have a handshake with this man, and the market moved. That is, this is a morning star, and this is an evening star at the support and resistance. The next one is called an abandoned baby. Abandoned baby have the same characteristics with the evening and morning star. The only difference between an abandoned baby and the morning star and evening star, they are both three candlesticks. They are both the bearish candlestick first, if it's a support, the bullish candlestick. But for abandoned baby, it could be a bullish candlestick, it could be a bullish hammer, it could be a bullish, a bearish hammer, it could be an indecision candlestick. It could be an indecision candlestick. That is the difference. It can be an indecision candlestick. Now, another difference is that the candlestick will, Roland, you have a low battery. Oh, sorry about that, please. Sorry about that. You can get the manual and check the YouTube channel and see, do justice to yourself. Okay, now, when you have this, when you have a bullish abandoned baby, the thing is that the bullish abandoned baby will gap. That is why it's called abandoned baby. When you somebody gives birth to a baby and went to throw the baby away, the mother is far away from the baby. That is the only difference. The mother is far from the baby. The baby is in a gutter. The mother is in her house. The father is in his house. Do you understand? So that is what we call abandoned baby. When you see it on it's very rare. It's very rare, like that cloud cover and the piercing line. In fact, that cloud cover and piercing line are very distinct. That cloud cover, sorry, abandoned baby is a little bit rare. Another one about abandoned baby is that you can see multiple candlesticks before that bullish run. There might be a range of indecision candle, of a hammer, of that's what we call a high wave signal. High wave signal. If you see that the support is a high wave signal for a buy, that thing is like when you want to, when you go to a car wash, they use pipe to wash your car. You see, they will reduce the nozzle of that pipe. Why are they doing that? So that once they release their hand, you see that water will come out to pressure with momentum. So that thing you see a range, one time you shoot up, that breakout is what we call a massive movement. So you can take advantage of that different candlestick, which is called a high wave signal for your bias for a buy or a sell. Okay, so abandoned baby, you see where you have your entry, stop loss order, and profit target. So this is an abandoned baby. The thing is that there must be a gap between the mother and the baby. That is a bearish, that's a momentum, gap, bearish momentum. Then before you see the bullish run. Oh shit, we have done justice to candlestick. Let's go to our charts. I want to believe nobody will say he or she has not been blessed with candlestick. Let's look for sandwich. I saw sandwich. Is it on this chart of gold? Good, I like seeing. Okay, before I go far, this is a morning star. This is a morning star. Sorry, this is an evening star. Look at it, an evening star. This is an evening star. Have you seen it? This is an evening star. We said this hanging man can be a bullish hanging man, no problem. It's not a problem. This is a perfect example of a what's it called? Evening star. Look at it again here. This is an evening star. This is an evening star for a bearish run. This is an evening star for a bearish run. This is another one. This is a morning star. We'll have two candlesticks. Look at a good one. A morning star. Look at it here. A morning star. A morning star for a buy. A morning star for a buy. Let's go to, I told you I like using the current chart. It's a live chart. Let's see. Okay, now look at it. Look at it. If you have seen this, look at an area of value. Look at it. Perfect morning star. The market scaled up. Boom. Morning star. The market moved. Market moved and moved well. Market moved. Only spotting this morning star. Look at it. Let's say he didn't take this one. Okay, let's say he didn't even take this bullish candlestick. No problem. Look at it. This market came back here. Based on native level. Look at where I draw my native level. Look at it. 86 pips. 86 pips. I don't tell you who take all these trades because we might just do analysis and we might not be on that particular trade when he's playing out at that point in time. That is why I told you, me, I belong to some signal groups. I'm not there because I take signal from them. For me, if you give me signal, I don't even look at it. What it just does for me is that it just tells me that, oh, NZDJPY is buying. Then I'll go to my NZDJPY and check and do my analysis and enter my buy. There are some signals I will see. I will ask myself, are you sure these people are okay? Why would they be saying sell when the market is buying? And to me, market is buying. I am buying. I'm in profit. So I should say, why? Possibly the man might be selling a pullback, a small pullback, wants to collect 10, 20 pips and run away. Is that what I'll follow to go and sell? And that is why so many persons have bled their account. So many persons have depleted their account. Why? For independence on signal. 1-2 signal, 1-2 signal. I tell people, if you depend on signal, you are like on a life support. Life support. Once that signal is not there, you are dead forensically, or you go. The person is dead. The person cannot trade because there's no signal. But we want you to trade. Do analysis anywhere, even if you're in a hole. What you just need is a chart. You just need an internet. That is all you need. And your funded account. You can trade and collect something. So that is it. So this is a morning star. Let me look for, I will just need to be fast because we've almost spent all the time. Spent time so much. Let me see. Oh my God, I like going to a higher time frame, please. So small time frame, give me headache. Let me increase my time. Look at Morningstar here. Look at Morningstar. Let me show you as we're going. So if you look at this good now, we're still expecting what is called what? A Morningstar. Look at it. I'm just telling you a live chart now. Look at it. We're expecting a Morningstar. If the market go up, come down, then we're expecting a Morningstar. By the time we see this morning star, there's a confirmation for a sell. But for now, only this one candlestick, we know it is an inverted hammer, and we should be getting up for what? A sell. Oh, where's the sandwiching? Why sandwiching like this? Okay, now look at this one, this three. This three. 1, 2, 3 at the support. I told you at the support. At the support, 1, 2, 3. I told you the candlestick in the middle is what determines the direction. Is what determines the direction, and that is what a sandwich, bullish sandwich. Let me see a bearish sandwich. Let me see bearish sandwich and see if we can now call this a day. This is another one, but let me see a good one. This one, 1, 2, 3. This 3 candlestick. 1, 2, 3. The one in the middle determines the sell at the resistance. I told you support and resistance. You can see it anywhere on your chart. You go and enter on your own. On your own. Don't know how to draw support and resistance. Look at the piercing line. Look at the piercing line here. Piercing line for the buy, if you remember. Why this thing? What is this? Oh shit! I need to give time for people to ask questions. This is about the support also. Let me see. About the support. Let's see. Let me shrink my chart. Because somebody now, somewhere now will say, Josh is just seeing it anyway and press it. Yeah. Let me see. Where is that place I did that? Well, I've drawn my listening. I told you when you see it at a strong area of value. Where did I draw that in against? Here. No loss. Okay, look at it here. This is it. Look at it. Even in weekly self, the markets do not look at it. It came here. That means a weekly that we can see from December 2001. That market has just been going down. Look at where it break and retest and went up. Now look at it. It came here again. It did not break below. It did not break below and continue below. The market went up, and since then, market has been rallying up, rallying up, rallying up, rallying up, and the market has been up. That's good. So this is a support. This is support. So again, a native level would have given us a confirmation also that it's a support. Now look at it, this support. I told you the one in the middle determines the direction of the market. All right, so let me give opportunity for people to ask questions, please. No, but thank you, sir. Okay, Roland, you're there. All right, so let me give opportunity for people to ask questions. Let me get your question. This is almost exhausted 1 hour, 50 minutes. So please, let me give the next 10 minutes, let's say 2 hours. Otherwise, this class is supposed to be 1 hour, 30 minutes. But let me give 10 minutes for people to ask questions. So if you raise your hand, I will call you for your question. If you don't raise, if nobody raises hand, that means we'll call it a day because it is assumed that everybody understood what was discussed. Yeah, King Dan. That's one. Who else? Can we give it to a lady to come and prosper? Yes, two. A lady, please. Lady, if it's not a lady, I will not give you. I will not give the third one. A lady should ask question, please. Please, lady. Okay, Cynthia. All right. So, Emmanuel, calm down. We're giving 3. I just believe somebody will ask a question. King Dan, start. After you, Chukuma, then Cynthia. Then if our 10 minutes has not been exhausted, then you can give to Emma. Yes.
Okay, good evening.
King, continue.
Good evening.
Good evening, sir.
Yeah, please.
Good evening,
sir. What I want to ask is from the example of the sandwich and that of the other one you called after the sandwich,
Morning star, evening star.
The morning star and the evening star, and which is also like the abandoned baby, although the abandoned baby is of enough gap. But that morning star, evening star, and then this sandwich you spoke of. So how do we know like when to give the trade? In as much as we are to wait for the first candle to finish its formation, and then the second one, which is the middle one, then on the third candle, which is the third day. So how do we know when to either buy or sell?
Okay. Now, see, let me tell you. Let me see. Look at this candlestick now. Let me see. This is a candlestick. This is day one, candlestick day one, right? Now, this, okay, let's say this is day one. Now, the next one came here. It went up like this. Yeah? Now, came back like this. Yeah? And did this. And leave wick behind. Leave wick behind, right? Ordinarily, in single candlestick pattern, we say this aggressiveness of seller, right?
Yes.
Good. We say it's aggressiveness of seller. And in single candlestick pattern, we say if you see this in a higher time frame, you should get ready to engage the market for that. At least the first one month, if it's on Saturday, you're doing weekly analysis. Monday, Tuesday, Wednesday, be engaging this market for a sell. Look for opportunity to sell, even in a smaller time frame, because you are on the trend. Now, this sell. Now, let's say the next day came. Look at the next. That's why I didn't say you should sell. I said look for opportunity to sell. Do you understand me? Now, let's say this candlestick came. This is close to somewhere around here. Now, this one came. This one came and started going up. So as it is going up, your bias is that you want to sell, right? Now you go up. This market went up to this point. This market went up to this point, brother. And now I have ever told you, look, this is your stop loss. Above here, little above here is your stop loss, yes? Now, this market is doing this. I have told you what you need to do. If you're seeing this thing in daily, don't stay in daily and wait for this market. Now you are going, because I say allow candlestick to close. Brother, before you want to say, before this candlestick will close, wait, you could see. You see, child, the market has gone far. And it has gone far through too. So what you need to do is, brother, go to H1. Because that H1, now candlestick to close is 1 hour. But this one, candlestick to close is 24 hours. So now you look at this 1 hour, the next candlestick that came now gave you an opportunity for you to sell based on what you have done in candlestick. It's either you saw another shooting star again in that H1 that did not take out this high. Brother, engage that market for a sell. If this market at the end of the day, you go back to your daily time frame and see that this market closed like this, guy, it has given you a confirmation to sit down in this market and sell the market. That is what it has done. But if you are somebody that, okay, you just came and saw this three candlestick like this, that it has given you a confirmation that this is an evening star. Brother, what you have done, what you need to do is that I will always advise, wait for a retest, wait for this man to come and have a handshake with this guy. Wait for this man to come and have a handshake with this guy. By the time it has a handshake with this guy, you're scaling down. When you go to a lower time frame, this is not happening in daily. When you go to a lower time frame, this is what is called a failure swing. You engage yourself. Somebody will tell you, come, let me teach you market structure. Collect $100 or $200 or $50 from you. But I have just used candlestick to teach you market structure. Even that thing where they call double top and double bottom, I can see it in a daily time frame with just one candle. I'll tell you that in a smaller time frame, this thing is double top. In a smaller time frame, this thing is double bottom. In a smaller time frame, this is head and shoulder. Somebody in hell like this smaller time frame will be telling you smaller time frame, collecting your money, teaching you market structure. But here we have just taught you market language, and you've seen that it tells you what they call structure. Brother, do you understand me? I've answered your question.
Yes, thank you.
Huh?
Yes.
Cool. So when you see this, brother, just wait for a retest, because the market will do a retest. It's not as if it's buying; it's just come a retest. Come and shake this elder here, the elder kinsman, before it will continue the journey in the village square. Okay, next person, please. Who is the next person? Ask a question.
Okay, good evening, sir.
Yes, good
Hello.
evening, Chukuma.
Okay.
Yes,
Thank
Chukuma,
you, sir.
can hear you.
And it's been a nice time in your class. Thank you very much for the
Okay.
teachings. So my question is, based on, you've taught us about so many candlestick patterns. My question is, must I trade all these candlestick patterns? Because I know apart from these ones you told us this evening, there are still many more candlestick patterns we might have to know about in the future. Must I trade all these candlestick patterns? Or can I just select a few I think I'm okay with and trade them?
Thank you very much, Chukuma. You must not trade all these candlestick pattern. That is why
Okay.
I will always say too much analysis leads to paralysis of analysis.
Okay.
You can decide, okay, I want to be trading shooting star. I want to be trading Harami. I want to be trading engulfing. Then that means you are a lord, you're a champion of engulfing candlestick. Anywhere it day, they call you Chukuma. What is happening in GBP USD? You say, brother, that market is about creating an engulfing candlestick. That market created engulfing candlestick last week. We're looking for a retest to continue our sell. You know, when you talk like this, you talk like an authority in the market. Do you understand?
Yes.
Yes. Doesn't mean the market will always go your direction, but you are talking with authority. You are an authority in that field. You have back-tested that thing. You understand? So you just have to decide which one. You see, that's why in your curriculum, we decided to reduce it because we don't want to teach you everything. It is the too much knowledge that is causing so many problems. That's why we say, get the knowledge that you need to collect money in this market. Even if it is only candlestick, even if it is inverted hammer alone, shooting star, you know, brother, you can use it to collect money. Once market play out, then you know that this guy has come to my kill zone. I will kill it. Have I answered the question?
Yes, very much, sir. One more thing, sir.
Thank you.
You talked about you talked about getting the course and watching your, as in you told someone to get the course and watch your YouTube videos. How can I do that, sir? How can I get the course? How can I get your YouTube channel?
Which course?
As in you told someone to get, yes, the slide, yes.
Okay, the slide is for 5,000 naira. You're aware, it's on the group. So you can chat me privately, then we'll talk about the video.
Okay, sir, I'll do that.
You
Thanks.
can do a private chat, yes. Okay. So who else? Cynthia, please let's move.
Sir, my question has been answered. They've
Oh,
asked
thank
it.
God.
So,
okay. So let's give Emma the opportunity. Emma, Emma is the last. This is 10 o'clock. Emma, ask your question. Shoot. Yeah. Emma is not there. Okay. No problem. Thank you very everyone. Please ensure you get your manual and ensure you test this thing. See, when you learn, don't go back home and just relax. No. If you want to make trading a career, you will go back and check this thing that you are learning. Do you understand? Check this thing you are learning and see if it is happening the way it is being taught. That is when you gain confidence. It is not that George has just thought, okay, let me wait. Practice. If you don't practice, you forget even what is called a doji. The next time when they will start talking about a doji, say, I think they say a doji is something that does not have body. You get confused. So practice, go back, check this thing, current price, look at it. Okay, let me draw this my levels and see what happens. That's why I told some that my friend. I said, look, stay off chart first. Now what you do now is that start monitoring the chart. Don't trade, do more of monitoring, do more of just watch the trade. What is happening? You can go to 1 hour. Okay, I have just drawn this thing. Okay, let me see. At this point, is there a shooting star? Is there a hammer? Is there an engulfing? Is there Harami? What happens when there is a Harami? When you have gotten this whole information, you are equipping yourself to be a better trader. And I assure you, with the knowledge you will get in the UTB Trading Academy, you will do well in success. Sorry, do well in trading. That is the seal we have. What we don't know is how you practice it. By the time you move from basic, intermediate, and advanced, What you make you know forex? I go check out. We will know what you make it, what be the problem. Thank you very much, everyone. Good evening, everyone. We are ending the class here. To see you again, I think on Tuesday, right? To see you again on Tuesday. Because Monday, we don't have class on Monday. But let me see if it's possible. We'll have a Monday class on Monday. Please check your chart. We'll put it early enough before the time for the class. So just check your chart for group 2 and group 3. Please check your chart. We'll paste it there before the time. Thank you very much and good night, everyone. See you when we meet. Thank you very much.
Good night, sir.
Good night, my sister.
Good night.
Good night, brother.